You know that old saying about countries, right? You can either be the big boss or you can be deep in debt, but you can't be both. For about 80 years, the US kind of broke that rule. They printed money and everyone took it. They told other countries what to do, and most listened. They basically ran the show. But get this week, the big boss had to go asking for favors. Right now in Caracas, Venezuela, the US is doing something you'd never expect. For years, they tried everything to bring down Nicolas Maduro. They grabbed his planes, froze his money, even put a $15 million bounty on his head like he was some old Western outlaw. But suddenly, Washington is practically begging to make a deal with him. Why the sudden change of heart? Well, the petrodollar system, where oil is traded in US dollars, is in trouble, and they desperately need Venezuela's oil to prop it up. Meanwhile, back in Washington, the new guy running the Treasury, Scott Bessent, is having a total nightmare. He needs to borrow a whopping $3 trillion this year just to keep the country running. But his usual big buyers aren't biting. So, guess where he has to look? Across the ocean, to China, the very country the US keeps calling its biggest enemy. Talk about ironic, right? The US is basically fighting an economic battle with the two countries it desperately needs help from. Look, I worked at the IMF for years, so I've seen this movie before. When a superpower starts going hat in hand to its rivals for basic stuff, that's not some clever strategic move. That's a going out of business sale. Today we're going to pull back the curtain on these two desperate deals happening quietly. We're talking about the oil deal in Venezuela and the huge debt situation with China, because if even one of these falls apart, the American economy won't just hit a rough patch, it could totally grind to a halt. So let's dive into this embarrassing situation in Caracas. If you really want to see how much weaker the US has gotten, don't bother with fancy economic charts. Just look at who they're shaking hands with these days. Remember 5 years ago? The US basically said, Nicolas Maduro isn't the real president of Venezuela. They backed another guy, Juan Guaido. They froze Venezuela's bank accounts, took their planes, and put a $15 million bounty on Maduro's head. Seriously, like something out of an old Western. The plan was pretty straightforward. Crash Venezuela's economy, kick Maduro out, and grab their huge oil reserves. So how'd that work out? Maduro's still in charge, and the US's big oil plan totally flopped. Here's where the US messed up big time. They figured if they slapped sanctions on Venezuelan oil, nobody else would buy it. But guess what? The world still needs oil. China kept buying. India kept buying. And here's the kicker that probably gives the US Treasury nightmares. These buyers weren't paying in dollars. Venezuela basically became the first test case for selling oil without using the dollar. They started taking Chinese yuan and even crypto like USDT. By trying to hurt them with sanctions, the US actually forced Venezuela to build its own financial immune system. They showed everyone that you can sell oil without Washington's say-so. Now, the shoe's on the other foot. Sure, the US has lots of oil in Texas, but it's the wrong kind, what they call light sweet crude. Meanwhile, the huge refineries on the Gulf Coast, built like 50 years ago, are designed for heavy sour crude. Without that specific heavy oil, those refineries struggle. They can't make enough diesel, and if we run out of diesel, the whole American supply chain, everything from trucks to trains, just stops. So we're seeing something truly wild. US diplomats are sneaking back to Caracas. They're giving companies like Chevron special permission to start pumping Venezuelan oil again. They're even offering to forgive debt. They're basically begging the guy they tried to kick out, please, please turn those oil pumps back on. This isn't clever diplomacy. It's practically throwing in the towel. It really shows that when things get tough, the US needs resources from other countries way more than those countries need the US's permission. But while the Venezuela situation is pretty embarrassing, what's happening in Washington is downright scary. While diplomats are pleading for oil, the Treasury Department is begging for cash. That's where our new Treasury Secretary, Scott Bessent, is caught in a tough spot. Most people think the Treasury Secretary's main job is to run the economy, right? Nope. His real job is to be a super salesman. See, every year, the US government spends trillions more than it brings in through taxes. To cover that massive gap, they have to sell paper. Basically, US Treasury bonds. For decades, this was the easiest gig ever. The whole world was lining up to buy American debt because it was seen as super safe. But this year, the numbers just don't add up anymore. The US needs to sell a shocking $3 trillion in new debt just to get through the next year. So Mr. Besant's big question is, who's actually going to buy it? He looks at Japan, usually their biggest customer, but Japan's having its own money troubles. They're actually selling American debt to save their own currency, the yen. He checks Europe. They're kind of stuck, dealing with their own economic slowdown. He even looks at American banks, but they're already loaded up with government bonds and losing money on them. So, really, there's only one country left in the world with enough cash to bail out the US, China. And honestly, this is where the whole thing becomes a complete joke for the US. On one side, you've got politicians yelling about trade wars, threatening huge tariffs, and generals talking about potential conflicts in the Pacific. But on the down low, behind closed doors, the Treasury Secretary basically has to call Beijing and say, please, please don't sell our bonds. Actually, could you buy more? Because if China decides to stop buying, or even worse, if they decide to sell off the hundreds of billions of dollars in US debt they already own, the entire American financial system would just crumble. Interest rates here would skyrocket overnight. Mortgage rates could hit 10, 12, even 15%. The stock market, which relies on cheap money, would crash. It's like the US is trying to point a gun at China's head, but China is holding the deed to the US's house. Mr. Besant, being a smart finance guy, totally gets this. He knows you can't go to war with your own banker, so while the news keeps saying how tough the US is on China, the truth is exactly the opposite. The US is stuck. They need China to help pay their bills, and China knows it. They're just sitting back, watching Mr. Besant sweat, knowing that without their cash, the American dream can't even afford its monthly mortgage payment. When you connect these two stories, Venezuela and China, you really get the full picture of what's falling apart. For about 50 years, America's superpower status stood on two main supports. First, there was the petrodollar system. Basically, we protect you, and in return, you sell your oil in dollars. This meant every country had to keep dollars on hand to buy energy. Venezuela just showed everyone that you can actually break that rule and still be fine. The second support was the idea of US Treasury bonds being super safe investments. The deal was, you give us your savings, and we'll give you a safe return. But now, China is proving that those returns aren't so safe after all, and those savings are actually being used against you. What we're seeing now is the end of what one French guy, a finance minister, once called the Exorbitant Privilege. Basically, America's super special advantage. For 80 years, the US had this incredible magic trick. They could just print green paper money, and the rest of the world would give them real stuff in return. They'd print dollars, and Saudi Arabia would give them oil. Print more, and China would send electronics. Print even more, and Brazil would provide coffee. It was probably the best economic deal ever, but that deal worked because of trust. Trust that the dollar was fair and neutral. Trust that it was a safe place for your money. Then, in 2022, when the US froze Russia's money, they shattered that trust. They basically told the world, hey, the dollar isn't just money. It's a political tool we can use against you. And now, all those consequences are starting to hit. While Washington is scrambling to put out all these fires, countries like the BRICS nations, Brazil, Russia, India, China, South Africa, are quietly building a whole new financial plumbing system. We're seeing a huge move towards countries just trading directly with each other. Brazil is selling food to China for yuan. India is buying oil from Russia using rupees. We're doing business without needing to touch the US banking system at all. That R5 project, real, ruble, rupee, renminbi, rand, it's going from just an idea to something absolutely necessary. It's not about trying to destroy the dollar. Frankly, the US is doing a great job of that on its own. It's more about building a lifeboat. The US is heading into a whole new era, what I call an imperial liquidation. They're being forced to make deals they absolutely hate. They have to put up with Maduro. They have to deal with a strong China, not because they've suddenly gotten nicer, but because they've gotten poorer. The US isn't getting an invite to the new global party, and for the first time ever, they can't even afford to buy their way in. So what's next? The US government will probably try to act tough and save face. They'll call that New Deal with Venezuela a humanitarian gesture. They'll spin their begging trip to China as strategic economic teamwork. But don't fall for the headlines. The truth is, the US economy is backed into a corner. They've run out of bargaining chips. When you're the big empire, you call the shots. When you're drowning in debt, you just have to accept whatever terms are offered. And right now, Washington is accepting terms from the very people it tried to crush. Eventually, the US will have to pick between two terrible options. They could just default on their debt, basically telling the world, we can't pay, which would crash the global financial system instantly. Or they could try to inflate their way out. Print a ton of money they can't borrow, making the dollar worth less so their huge debt pile looks smaller. History suggests they'll choose inflation. It's the easy way out for politicians. But for you, the everyday person watching this, whether you're in America, Europe, or Brazil, it's a slow drain on your wallet. This means your savings will pay the price for trying to keep the American empire afloat. Your groceries will cost more. Your energy bills will climb. It's like a special tax you pay when the world's top dog starts to stumble. But hey, it's not all doom and gloom. The world isn't ending. It's just getting new management. The rise of a more multipolar world, where groups like BRICS have more say, isn't something to be scared of. It's actually a return to balance, to a bit more sanity. It's about getting back to an economy based on real stuff, resources, and production, instead of just paper money that can be used as a weapon. Those crazy deals you might have glimpsed in the news this week, they're just the start. The time of the dollar being king is fading, and the era of the real economy is beginning. So, my simple advice to you is this. Don't just listen to what US politicians are saying. Watch who they're shaking hands with. Because while they're talking tough, they're actually shaking hands with the very people who hold their debt and their oil. The shift has already happened. The world just hasn't fully caught on yet.